Hi, Warriors. How's everything doing? What's everything doing? How's everyone doing? Let's have a great week. I just want to start off with I got back here Friday after the NFP, and I showed the reaction in the markets when the dollar weakened. Also, keep in mind that covered Euro and Aussie shorts before the NFP number. If not, I would have given them all back in the blink of an eye. Therefore, I'm always talking about red events that, if it gone my way, so be it. But to give up profits on the flip of a coin, you work too hard for your pips to do that. So let's start off with this was the rally that we had after the NFP number. And as you can see, the euro gave some back. Actually, Cable gave some more back last night before the rally, but my preferred long was in Aussie, which you can see hardly gave anything back. Has advanced another 25 pips here. So I'm saying that for now, not a final low, but for a pretty good rally, that Aussie has bottomed. So I'm looking for breaks to buy. As you can see, I have the fibs back here. Maybe we'll peak tomorrow, but I'm looking to buy pullbacks in Aussie as my preferred long because of the response here that we had with it giving nothing back. So look at this. All it did was move sideways, whereas Euro sideways to lower before it turned, pound sideways to a lot lower before it turned, and Kiwi as well, acting almost as good as Aussie. Aussie even acting better than its cousin, the Kiwi dollar. So I think that the last couple days' action has given me guidance for what I want to do when the market pulls back. Now we have the ECB this week. I think it's tomorrow. So what I'd like to see is a pullback led by Euro that may take Aussie down. So if I'm more constructive Aussie than Euro, because I think Aussie has more upside for this last wave down in the dollar. And you guys know that I've been talking about taking out the January lows for quite some time. They're down here at 89.20. And I actually think it's going to complete by the end of the month. I think risk on is going to complete by the end of the month. I think that precious metal rallies are going to wrap up maybe by the solstice or the end of the month, but it's only the 7th. So, 2 weeks in our business is a lifetime. So there is some upside in the gold. Gold held where it had to today. Actually, I think gold can make a run. Was talking about 1921. See how we held here, possibly up to the 1965 level, right up here, maybe 1990. I don't think we're going to see new all-time highs. I think we're going to pull back here, peak here, and then pull back. You could probably try and participate in silver for it to attack the highs here up in the next few weeks, up over $30. A lot of people will be looking for 38 if it gets there, and we have a breakout. I think there's a possibility it gets there, makes a third drive, and then peaks. We'll have to see what the behavior of it is up there. And always price action rules over a potential formation like a three drive. So just getting back to currencies, if I'm looking for Aussie outperformance, what would be a good way to pair it up? Okay, so good way to pair it up, and really got this thought from a guy I work with, Gregor Horvat. Here you go. Here's the Euro Aussie. Here's your weekly. Let me just get rid of that. Okay, so we have all this down here. I have shaky hands, but I trade with the heart of a lion. So there, you could see the outperformance of Aussie with Euro Aussie coming down from Friday, peaking out here. Even on the 4 hour, the new high did not confirm. So what I would do is I would use rallies here. I have the fibs drawn here. Take a screenshot if you have it. If you're here on if you're watching it on YouTube, invite you to come into the room where I'm posting things. I haven't even posted a trade today because I'm waiting for setups. Basically, have been flat since Thursday prior to the NFP, and now I have to be patient, let markets come to me. So this could be a nice way to participate in outperformance of Aussie on the last wave down in the dollar over outperforming the euro. So I'd look to sell a rally between, right up around the 157.80 level, 58 level would be, I don't think we'll get up that high. Moving averages coming in at 57.70. So, it's about a 100 pip rally. This to me would be a shorting opportunity, which means that for a few days, Aussie does not outperform euro. I don't know if it's going to be because the euro is going to get some real nice outperformance after the ECB, or that on any pullbacks for a few days, the Aussie will be weaker than euro. But to me, this looks like a real nice selling opportunity. And so I'm stalking this. It's a way to take advantage of a paired trade where you're not expecting Aussie uh, to underperform euro. So looking at cable here, cable really hasn't done anything wrong. I know there's some people looking for a break back down to 38. I don't see it yet, especially if we're on our way to just, break down in the dollar. Uh, I think upside potential, should we get back through this 42 level, is going to take us up to 143 and change, 144 and change. So right now, the bias is still to the upside. Just taking a quick look at euro pound, still looks pretty weak, especially from the turn last week that was forecasted. That's why last week the recommended and preferred short was euro, not pound. As you can see, euro at least had a nice little break last week where cable, all it did was break back to support. So EG continues to look kind of negative to me. Maybe we're going to base here, but I look at the daily, and the daily looks like there's even a possibility, at least for the 78.6 level to be tested. And we get through that, we have new lows coming in EG. Looking at the yen, I'm not in a hurry to buy the yen. Maybe what we have here is an ABC for major resistance here. The 15-minute has a 2 drive on it. Maybe that wasn't it. Let me just refresh. Okay. Okay, there we go. So here's the yen again. See, we had this 2 drive up here. But I would say that, closer to a buy maybe down here. But the reason the yen could still have some pressure on it is, how I was at first looking for lower yields, and I said, I don't know, maybe higher yields, and we've been in this rectangle for a while. There you go. See that? And now it's looking like we could break down. So, we're still sideways. I think the end might be telegraphing that we might break down. It's a coin toss to me, but it doesn't make me want to be in a hurry to get long US dollar yen right now. And a weaker yen also favors the gold. So that was going to be what I wanted to talk about lately. And wasn't that great intelligence gathering with the interview that we had with Adam on Thursday? His seasonals favored the commodity currencies. He talked Kiwi and he talked Aussie, and that was here. That was this day where this was Thursday before the number and when Adam was on. And if you just taken his seasonal just to put a toe in the water, you had a nice lead, although hard to do in front of a big number. But if he's right, this is good for, maybe the rest of the month of June. So if you didn't buy the bottom, doesn't mean you missed it because there is potential, I think, in my view, for us to challenge and even take out the high in the Aussie up here. It was up there at 80, so maybe we're going to take out the 80 level on this. So looking to buy any pullback in that, and this should also be supportive of the short Euro Aussie trade. Um, Getting back to gold, I sent this out, last week, talked about this little 3 drive here, and it was a pretty good break, right? I mean, it was close to 50, $60 here. And I think this is important. And I'm looking to buy gold maybe around the 1874 level, risking last week's lows. I want to see what it can do on maybe we get an A, B, C. But I am looking for higher levels. I'm looking for this level to be taken out and try at least 1920. But there are a lot of people whose work I respect that are talking more like 1960, 1965. So during this last period, this is really the narrative that I'm working with throughout the month of June. I think there's another couple weeks left with the dollar declining, that we get this final washout to the downside in the dollar, which when that happens, almost everything goes up, right? A weaker dollar translates into higher gold. I think we could go to 1965. Silver, perhaps we get a test of this previous double top. I know a lot of people are looking for it to are going to be calling this a breakout here over 30, but could end up just being a 3 drives to a top formation. Um, Looking, so you could be long, look for a dip, a place to buy silver on pullbacks. Gold right now looks much better, but I can't imagine gold railing $70 from here and silver not making an attempt to head up to the old high around $30. So this is part of the risk on trade. Metals and S&Ps are not moving contrary to each other, are they? They're moving together. So that brings us to the S&Ps here. And, it keeps teasing everybody about making new highs, hasn't done it yet. If there's a little dollar strength for a few days, we might get a pullback, maybe into this range, the 4,200 level. This pivot, as you notice, and this is a great lesson. So when you look at support and resistance levels, here's the analogy I'll use. It's not cement, okay, where it has to just stop at that one point. It's more like a mattress where you have an area of cushion. And why is it good to use it as a mattress? Because that means you give it a little tolerance. You'll notice I'll talk about not trying to be perfect on everything, and giving your stops tolerance and giving formations tolerance. As you notice, maybe you could call one candle close underneath it, but the other candle tried to and couldn't. So it was a legitimate pivot, even though you had some wicks that were trading underneath it. So here we are pushing up again. We're not at new highs yet. I'm thinking that the next 2 or 3 weeks, maybe it's going to be on an infrastructure deal. Maybe lower rates could be, if I'm right, and say rates come off, and the 10-year heads back towards 130, which would, just be a correction of this big rally we had, 130, right? and then yields start going up, and maybe the stock market makes hay and the dollar sells off because of yields coming off. I mean, that's the obvious fundamental argument: lower yields, lower dollar, lower yields, higher gold, lower yields, higher risk, higher equities. So we'll see if that's the um, thing that really gives it this melt up final push up. Maybe this is a wave four triangle with a five to come. Also, you guys know I've been patient. In fact, when we were up here, and this was a pretty good sell off, right? This second drive here, maybe not to the same magnitude of the first, but you guys know I'm waiting for a third drive for a position short, not just a trade, but a position short, where I think that once we peak, we could see 10,000 in the NASDAQ 100 again. So, we still have a ways to go. Maybe there's another 3% left and we could trade 14.3 or so. That'd be about 600 points from here. So that would actually be about another 4 or 5% from here. S&P's 4% would be uh, that'd be about 160 handles, take us up to 4370, which is possible. So, and I'm looking for this to happen here um, over the next 3 weeks into the end of June. I think we have quadruple witch on the June expiration. We have the summer solstice. I believe it's the 21st. It's been a great spring. And so I'm looking for some type of high to come in here. And it's just what I'm looking for. It doesn't mean it'll happen. I mean, perhaps the S&Ps aren't going to make a new high and we're going to fail from here. You know what? There's one thing I could guarantee if you're a trader: be prepared for everything, be prepared for anything, and there won't be any surprises. So keep an open mind. Even when you have high conviction on things, always be thinking about the guy in the other shoes and what he's thinking, and that there's a possibility for an alternate scenario. And that's why risk management is everything. Otherwise, you'll blow up. And how do I know? I've done it. Okay, so don't blow up, and try and build some liquidity for what I think is going to be a pretty significant turn. In fact, I would call, if I'm right about this scenario, and we're weeks away from a high in the market that I think is going to be significant enough to generate a potential 30% decline in the market over the next several months. And you're going to want to be prepared to be selling rallies in a lot of different instruments because they all went up together. So I'm not one of these dollar bulls looking for, once we have a low here, which we will in my work see the 88 handle somewhere in the 88 range, maybe 87 and a half. But then once that happens, once we flush, you could tell we're not going to confirm this low. I doubt we'll even be at 30. So once we complete this washout in the dollar, I'm looking for a recovery back to the 95 area back here. This was a major breakdown in the dollar. Then I think we have a major dollar problem. And if we get to 95, you're probably talking about 115, 116 to 114 euro. That'll be a long-term buy for me. So I'm just looking ahead. But in the meantime, I still think there's some opportunities with risk on the long side that I want you guys to, if you want to just trade lightly, and that's a pretty big move in gold if I'm right for another $70. So I'll be looking to possibly buy that. Euro silver's already bouncing back pretty good, guys. So this may have been it. So we've already rallied about 30 cents. So again, it's hard for me to imagine gold at 1960 and silver not challenging these highs up around $30. So S&Ps, I think we could get to 4,300, even a touch above it. If you just do some measured move from here to here and then tack it on, you're going to get 4,300. I'm a little surprised, but it's actually pretty constructive. NASDAQ, I'm looking for a third drive that should take out these highs. These highs were 14,073, maybe by 300 points or so. I know a lot of people aren't looking for a new high in NASDAQ. I need a new high to have the form that I'm looking for a third drive to a top. Okay. And this is your daily. So we could be about 700 points away from that. That's achievable in the next, we have 3 weeks left in the month. So it's not that NASDAQ hasn't tacked on, 600 points in 3 weeks. We've seen it do it in a couple days. So that's what I'm waiting for. And I think during this last period of rallies in gold, selling in dollars, that, we're going to have a three drive to a top formation. Okay. Uh, we're going to have glaring divergence on multiple time frames. The last one will probably be the 15 level. So here's the VIX, and the VIX, I thought we might get down, and if we have a melt up, I still think there's a chance that we get down to the under the 15 level here. It looks like around, we could be shade under 14. So there's the possible three drive formation that I'm looking for. Here's one, and here's two. And over the next couple weeks, we'll see if we could get back down to this line and have the VIX RSI hold above 30. Okay, so same thing in SQQ. It's now after Friday gave up the 78.6 level. I'd like to see these lows taken out. I think if the Nasdaq makes new highs, it will. Um, Oil's probably on its last leg before we get some type of correction. There's an awful lot of bullishness and people embracing it now. I wish I had embraced it a few months ago. Uh, I didn't. And the keyword is next. So, we are getting some daily divergences up here, kind of a grinding, slow, kill the bears type of advance. And I'm sure there are other time frames where new highs are not confirming. There's another one. As you can see, we're not confirming. We haven't confirmed since this high right here, and almost looks like a 1, 2, 3. Crude should give us a signal as well for, some type of the market's all inhaling. So I'm calling risk on. The market is exhaling and blowing up the balloon. And then when we get the peak, there'll be an inhaling and some of the air come out of the balloon. So everyone with me, that's what I'm thinking here. Okay. Um, so oil, TLT, maybe we're, still in a wave 4, and like I said, maybe yields could continue to drop, and and that's when the market, takes some of the pressure off the market, but eventually they're going to turn back down. I know most Ellioticians are labeling this, whether it goes to new lows from here or has a little bit more upside left in it, which if we're going to 130 in the 10-year, this would um, have some more upside left in it, which perhaps the market takes as bullish because there's less interest rate pressure on it. So again, here we are looking at the 10-year. All right, so Bitcoin, I tell you what, it sure seems to be trying to hold, but again, I've been saying until I get closes back over 40,000, you can't rule out another washout. especially remember we had this death line in the sand up here? Remember that? And then once we broke it, it turned into a waterfall. Well, here's another one for you for Bitcoin. So if we start breaking down here, that would make it look pretty much like a bull flag, and that could measure all the way down to like 23,000 or so. So keep an eye on this. I mean, it's not real bullish action as far as I'm concerned. All it's doing is working off the overbought level, oversold level more in time than price. It hasn't been that much of a price recovery. Everyone with me? And a lot of people gravitating more towards Ethereum. As you can see, it has a little stronger structure, but maybe we need a 3 or at least a retest here. So this could be, if I was flat, I'd sure like to see a break. Something like this in Ethereum would be nice, wouldn't it? Maybe you have a chance to buy it back here at 1200. So just a little bit of a speed line that could set something up here. I'll leave it there. And before we go, I did want to talk about something. I was talking to some of my mentees on Saturday, and even though I'm talking about this blow off scenario, I just want to show you guys this. Okay, this is the canary in the coal mine. Now, I'm not expecting an imminent breakdown. In fact, if I'm right about NASDAQ having a rally, Tesla should continue to hold, as long as we don't break out over this downtrend line. What I see developing is a descending triangle. And then it was so weird. A friend of mine sent me a video that Anonymous is now, not a fan of Elon Musk. And I'm thinking to myself that Anonymous must have a technical analyst with them, because if you look at the chart and you go back to some classic charting books like Edwards and McGee, this is a descending triangle. It's a topping reversal formation, of course, not activated until you get a breakdown. But this is a potential scenario. So, maybe for a while with NASDAQ, Tesla could rally, and, Elon could say, I'm not afraid of Anonymous. He can always escape to Mars anyway, right? I don't know if Anonymous is on Mars too. But this is going to be a real important event in the market, and it's not the only canary. But if you take a measured move from this 530 to 900, you're talking about 370. So, you're talking about $200, $300 Tesla, right? On a breakdown for a measured move. So I'm not saying the cars aren't good, but on a breakdown, Tesla's got some major problems. That's a pretty big formation. And, Amazon's not acting great either. Could be another canary. I mean, it peaked on this news, did not confirm. I'm not saying we can't rally, but, back under 2,900, the support level, we could go to 2,300. There you go. It's just holding a 50-week. And Apple. So if we get a nice blow off, maybe we get one more high in Apple. But Apple hasn't made a new high since the beginning of the year. Maybe it ends up being some type of head and shoulders formation. But on the daily, we actually even closed under the 200-day. Anyway, I think major inflection points in the week ahead. But in the meantime, you could probably be long risks, long metals, long Aussie on dips. Look for the Euro Aussie trade, and keep an eye on Tesla, the gold, the silver. So, there's still some time to be long indexes, possibly 2. So, but I do think that the window of long risks just being a one-way street could be coming to a close for a while, maybe all the way through the summer. So I'm keeping a lot of powder dry for this inflection point. So I hope everyone has a great day. Any questions on anything I've covered today? We have Saeed Zaman, who has a huge following, is going to be our guest on Thursday. In the meantime, don't just count your pips, count your blessings, and see everyone tomorrow. Same time, same station. Adios.